So it's time to do business again. This time it's 55 minutes around the world of business. And this is what we have prepared for you on this episode of the program. We can tell you that in Uganda, there's trouble going on there. Chinatown superstores have been closed after a bomb scare. And Ethiopian airline has suspended flights to Eritrea. Find out the reasons during the program. Good news in Kenya. Civil servants there are expecting an increase of their salaries. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. We start from the global space, but metals this time. Gold prices held steady on Wednesday as investors brace for a monthly U.S. payrolls report that could influence how swiftly and deeply the Federal Reserve cuts interest rates this year. Look at the numbers right there. We see a bit of steady waiting for that decision. We see four other metals, starting from spot gold, it's unchanged, 2,493.34. That's for spot gold, retaining what it had about this time yesterday. Platinum is, however, up slightly, 0.2%. Then $904.65. Spot silver down 0.4% at $27.94 a barrel. Well, traders are still calculating how much interest rate cuts to expect this year. Now they're placing at about 41% of a 50 basis point rate cut by September 18 and a 59% chance of a 25 basis point reduction. So far this year, gold has gained 21%, hitting an all-time high of $2,531.60. That happened on August 20. It was driven by U.S. rate cut bets and the Middle East concerns. So data on Tuesday shows that U.S. manufacturing contracted at a moderate pace in August amid some improvement in employment. And so we'll watch out and see if their calculation, that's the traders' calculation, is what the U.S. Fed will go by. We look at the gold oil space now. Prices fell on Wednesday, extending a plunge of more than 4% the previous day on expectations that political dispute halting Libyan exports could be resolved and concerns over lower global demand would also be handled. You see Brent right there at $73. Odd number for Brent, but that's what we see. $73.38 a barrel after it dropped 0.5%. WTI of the United States below 70 now after it dropped 0.6%. Yes, there's been a kind of consensus in Libya about how to have a central bank leadership, and both parties, the warring parties, have agreed to choose one person. So we hope that will bring succor among the factions and the supply and leadership of both the oil and the central bank of Libya. Now we come to Nigeria, where we tell you that the Nigeria Employers Consultative Association, NECA, has criticized the recent hike in the pump price of petrol by NNPC Limited, saying it unfairly burdens Nigerians with the company's inefficiency. NECA's Director General, Mr. Adewale Smart Oyerinde, voiced these concerns in a statement following NNPCL's announcement that the new pump price of PMS would be about 897 naira per litre, depending on the area or the state where you are. Mr. Oyerinde expresses disappointment that instead of reducing petrol prices after the completion of Dangote Refinery, the government is imposing more hardship on Nigerians, further increasing the costs of doing business. Now, talking about Dangote Refinery, still reactions following that later. So, the Ogun State Governor, Prince Dakpo Abiodun, said that the commencement of fuel production by Dangote Refinery will strengthen the nation's economy and eliminate constant shortages and conserve foreign exchange. The governor, who shared this in a statement signed by his chief press secretary, Mr. Lekan Adeniro, said that with the refinery coming on stream, one of the most significant challenges faced by Nigeria for more than 3 decades, which is reliance on fuel importation, will be solved. According to the statement, with Warri and Port Harcourt refineries also being prepared to begin production, Nigerians will heave a sigh of relief from constant fuel shortages, while the economy will also receive a boost Prince Abiodun praised Alhaji Aliko Dangote for his determination in seeing the multi-billion-dollar project against all odds. The governor also commends President Bola Tinubu for his intervention in ensuring that the refinery comes on stream during his administration. And now, moving away from that oil and gas, Nigeria has expressed its readiness to strengthen relations with Indonesia. The Minister of Information and National Orientation, Mr. Muhammad Idris, stated this in Bali, Indonesia, where he represented President Bola Tinubu at the second Indonesia-Africa Forum. Mr. Idris highlights the untapped economic potential and avenues for cooperation between both countries. The minister adds that Nigeria is committed to fostering a stronger partnership with Indonesia to achieve mutual economic growth and prosperity.
The forum, therefore, presents the platform for heads of state, government officials, business leaders, and stakeholders across our regions to not only discuss economic cooperation, but to also address common global challenges and explore avenues for the implementation of mutual sustainable growth and development. Nigeria's leadership position in Africa is also focused on tech ecosystem and has continued to drive innovation and digital orientation aimed at providing an enabling environment that will foster entrepreneurship and contribute to the continent's economic growth. Ladies and gentlemen, it is my fervent hope that discussions at this forum will focus on critical issues such as economic transformation, energy and mining, food and health security, and the digital economy. These are the pillars upon which our future cooperation will be sustained, and by leveraging our shared strengths and resources, we can drive an inclusive and sustainable economic growth that is beneficial to our various countries.
The chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Mr. Taiwo Yedele, is confident that the tax reforms put forward by the committee as proposal before the National Assembly will not only clean up the system, but set the country on the path to economic recovery. Speaking at the sidelines of the 2024 conference of the Nigerian Economic Society in Nigeria, Mr. Yedele urges the National Assembly to expedite action on the proposals aimed at sanitizing the tax collection system, streamlining the tax collection process, and improving the budgeting cycle.
The quick wins are already being implemented. Those include waivers of taxes on food, on diesel, CNG, renewable energy, and we've got some on pharmaceutical, we've got agri. So the quick wins are already being implemented. But the significant ones are the ones that we're about getting into now, where we're trying to pass new laws, amend the constitution, agree on our spending policy, borrowing policy, what do we do with local government, so that people can begin to feel the real impact of the sacrifices they're making, as well as the impact of government in a positive way. It's supposed to be a debate for economists. They have professors, PhD holders, and it's good for us to have this kind of debate. It's healthy for society, such that the final decisions we make are the ones that are actually indeed necessary for our countries. So my personal view is that you need economic recovery, because if you stabilize at the points where you don't want to be, it affects the whole economy. If you focus on recovery, then you recover to a point where you're comfortable, and then you stabilize at that point. It was good that we had two professors, both economists, and they had different views. So hopefully, before they conclude this conference, they'll be able to debate it even further, supported by evidence and data, and be able to advise us.
Now let's talk about the new oil. That's data. The Nigeria Data Protection Act was passed into law in 2023, June 12, 2023, in a bid to codify and introduce structure to the Nigerian data protection regime. As we speak, I learned Somalia data protection authorities are in the country to understudy the Nigeria Data Protection Act. So one would ask, is Nigeria doing that well? Well, let's discuss this now with a certified information privacy professional. He is Oladipupo Eluyera. He joins us from our Abuja studio. Mr. Eluyera, good afternoon and thank you for your time.
Good afternoon. It's my pleasure to be here today.
Yeah, so I don't know if you've heard that Somalia representatives are in the country to study our own data, and one wonders if we're doing so well. How well have we done when it comes to data protection in Nigeria?
So in my own assessment, I think we have done fantastically well when it comes to data protection. So data protection is quite infantile in Nigeria. I mean, we just had our first act on data protection in 2023. I think that was June 2023. So it's not a field that Nigeria has spent decades of experience in. So, and the Nigeria Data Protection Commission, which is a regulator for data protection in the country, they have done amazingly well in implementing the provisions. I mean, just 2 weeks ago, Fidelity Bank was fined the sum of over 555 million naira for dastardly act of infraction on our data protection law. So what happened exactly was that Fidelity Bank was reported to NDPC by a customer for registering an account on behalf of the customer without the customer's consent. And Fidelity Bank was invited for questioning, and after the investigation, they realized that even beyond that infraction on the data protection law, Fidelity Bank has infringed on other provisions of the data protection law. And apart from NDPC investigating and punishing infringing parties, they have also released several guidance notices to implement the provisions of the Nigeria Data Protection Act. And secondly, NDPC has done a great job in preaching the gospel of data protection in different forums, on LinkedIn, in Abuja, in Lagos, among corporate entities, law firms, etc., etc. So far, considering the fact that it's still something we have infantile experience in, we have started well. NDPC has put its foot on the throttle, and they are doing a great job so far. Although there's still room for improvement, but so far they are doing a great job.
Of the number of money being lost, not just by individuals but institutional individuals also, but this also brings to bear the penetration of, or the need for protection in the area of cyber security. I mean, because we have moved, a lot of our transactions have moved online. So obviously you expect more illegal transactions also online. But looking at fintechs now, digital banks and all of that, we see them, that is their first space. That's not the alternative, that's their first space. Would you say they're doing enough to protect the data of customers in the country?
Yes, so I agree with your concern. I mean, everybody knows cybersecurity has become a raging concern recently due to the unending and incessant attacks on fintech companies in Nigeria. And this goes to the fact that, I mean, in recent years, you also agree with me that we have witnessed substantial data evolution in our banking and financial services sector due to the rise of fintech companies every single day. And of course, they have made our banking experience to be unparalleled when it comes to convenience and accessibility. Just like you said, we have graduated from facilitating transactions over the counter at banks, so you being able to transfer money with a click of a button on your mobile app at the convenience of your house or your office. But sadly and ironically, even though these fintech solutions offer us remarkable ease and inclusivity, they have also made the sector to be much more susceptible and vulnerable to cyber attack. So I wouldn't say we are not, the country or the institutions in charge of cybersecurity are not doing well. Like I said initially, the space is still new. When it comes to the law and implementation of the law, we are still at an infantile stage. So we can do better. We are doing well. So there's still room for growth. And luckily, with the rise of AI in Nigeria, globally, and of course in Nigeria too, we can exploit AI and the sophisticated tools that it comes with to combat emerging threats in cybersecurity.
So let's look at it from the consumer's point of view. I'm sure there are some tips, or steps that consumers should, be carrying out or be conscious of to stay protected or to protect their data, even while, sharing this data with banks and fintechs and all.
Yeah. So, just like you're being said, cybersecurity weighs equally on the fintech company itself and even the customer. It will shock you that there are still some customers who use their surnames or other irrelevant information as a password to their key mobile banking apps. So that makes you to be very vulnerable to cyber attack. So as a customer yourself, you need to be able to enable the 2FA, the multiple factor authentication on your mobile banking apps, even on your social media. So when you are sharing information with a fintech company, you must ensure that in every form of sharing, it must be secure. And your mobile banking app, which is the app you are using for your transaction, you must enable 2FA. And of course, you must be conscious of phishing attack. So there's a popular cyber threat which is called a phishing attack. So it's a form of attack when malicious actors they will personate trusted brands like maybe your bank or other financial institutions. They will send you an SMS or an email with the intention of tricking you into disclosing your sensitive information, such as the login details to your web banking app. So as a customer, you must also be vigilant of those kind of attempts. So when you see a link that you assume that may not be from a trusted source, you must be very wary of clicking that. So secondly, the 2FA is one of the most important security measures, because even when your mobile banking app has been compromised and a malicious actor has access to your login details, they still have to send an OTP to the number you registered with. So when you have activated your 2FA and a malicious actor is trying to log in, they will send an OTP to you, which would require your assent. So if you don't send it to them, that means the attempt to compromise your account would not materialize. So on the part of the customers too, you have to educate yourself, enable 2FA, be wary of phishing attacks. Don't just download or click on links on unknown sources. It makes you very vulnerable to cyber attacks.
All right, thank you so much, Mr. Oladipupo Iluyera, a certified information privacy professional. Thank you for those tips, and I do believe that our viewers will at least practice a couple of it for their protection. Thank you for your time.
Thank you very much.
Let's take a break now. When we come back, we'll head to the markets. And then also, we'll give you updates from China from a different perspective. You don't want to miss it. It's here on Business Incorporated. welcome back to Watching Business Incorporated on Channels Television. We head to the markets now with Aniti Edits. Aniti, good afternoon.
Yes, good afternoon, Nini. Yes, intraday has bust your bubble yesterday. That you, yes, I know you reported the market that it was up by some margin.
0.08%.
Exactly. So, and of course, back to back, the market had gained about over 162 billion naira, but profit taking. And let's not get it wrong. That gain that you saw was largely attributed to the oil and gas sector.
Oando,
yeah, which has, of course, joined that prestigious group of stocks worth over 1 trillion naira. So
congratulations to them.
Exactly, and of course, we all know why that has happened because of that acquisition of Nigeria Ajib Oil Company. So let's talk more about the market as well as the oil sector on the NGX and Oando. Okay, so intraday market. The market was still trying to get to that 97,000 points, but of course, the impact of profit taking just didn't allow it to have that pursuit, that target which it was trying to get back. Let's not forget that this market had reached over 100,000 points, but has been pushed back all the way into the 96,000 level, which is still struggling to maintain. So 0.25% the last time we tracked for intraday numbers. And for the Johannesburg Stock Exchange, so Nigerian stock market is not the only one there that has cut down on, and that has reduced all the way from what it was before. Johannesburg Stock Exchange, initially yesterday where we tracked it intraday, it was at 83,000 points, well above that level. But right now at intraday, 81,665.75, down by about 0.6% at intraday. For the other markets on the African continent, we see EGX30. So it's mostly intraday negative numbers for most of the indexes that we track on the African continent. EGX30, 30,919.11 at down by 0.32% at last track. While for the Nairobi Stock Exchange, the NSE All Share Index was up. Tuesday's close, more than half of a percent, 0.57% for the close of Tuesday's trading session. Now let's take a much closer look at the NGX, but this time looking at the oil stocks in focus, as well as Oando, which is the new bride of the Swoots now, which joins the list of MTN Nigeria, GTCO, Zenith Airtel, Seplat, Boa Cement, Boa Food, and also let's not also forget Dangote Cement. So now this interesting feat. Let's get a closer glimpse on this, and as well as the market movers at intraday. So to tell us more about that, if we can have Abiodun Adeotun to have us. But before we get to Abiodun, let's get back to talking about the markets. But this time, let's switch over to the Middle East, where we see markets around there. They're also being pummeled. Dubai index down 0.28% intraday. The Abu Dhabi index also down 0.31%. At 9,350.36 for the Dubai Abu Dhabi index, and for the Dubai 4,357.53. So that's it for the Middle Eastern market. Now, we'll talk more about Oando. Oando, yesterday, it had crossed that. No, before we get to the Middle East markets, the other side of the Middle East market, let's talk a bit about Oando. That's Oando, which is an indigenous dual-listed stock, both on the Nigerian Stock Exchange as well as the Johannesburg Stock Exchange. It joined the club of the stocks worth over 1 trillion naira, and that was the the market mover. And also for the sector, it contributed to the sector's loan gain, which in contrast to the four others, actually we track about 5 indexes for the NGX, which is the banking counter, the insurance, the consumer goods, the industrial goods, as well as the oil and gas. But the oil and gas sector was the only gainer for the close of Tuesday's trading session, which we saw at approximately 0.6% in the green for that sector. So now, Oando, this follows just about a couple of weeks ago. Oando had announced that it had completed its acquisition of the Nigeria Ajib Oil Company, NOAC, which was formerly a subsidiary of Italian oil giant ENI. So we saw that also rubbing on, which is also a milestone achievement for that company. So talking about Oando, it has made its imprint, and of course, and this time we're also looking at the oil sector, because just yesterday where we saw NNPC announcing the new price per liter for petrol PMS, which also has been causing some pains for lots of people, and as is going to have its own effect on the general economy. But how is it going to affect the oil stocks listed on the Nigerian exchange? We'll get to find out when we have analysts talk about that. Okay, so now we're talking about markets. Now, if we can get Abiodun, I don't know if we have him there. Okay. Yeah, Biodun, thank you for joining us. Sorry, we know that technology has not been, sometimes could just have a mind of its own. Now, let's talk more about Owando's latest feat, which it has joined the suit. So now, what can you tell us about this, and how is the Owando's share price trading at intraday?
Good afternoon, Victor. It's good to be here again. So currently, there's a lot of profit taking happening in Owando. Right, the stock is currently on offer at it's lost about 10% today, and of course you would expect it to be so because the stock has really rallied beyond any imagination on news of its acquisition of Agipol, and I think as a result of that, there's been a lot of read across in similar names that have also moved. A lot of speculators appear to be taking profit across various names right now.
Okay, I seem not to be hearing you that clearly, but if I get you right, you're talking more about oil. But let's look at the oil sector. Yesterday, it was in the green, and that was the only contributor to the NGX's uptrend. But this time, at intraday, we see the markets being in the red. So what can you tell us about the oil sector as we speak?
The market is actually very quiet. Not so much is happening. The oil sector has actually been driven by what's happening in Owando and partly what's happening in Ethanol, right? Owando is in the red zone as I speak to you. There's a little bit of slowdown in Ethanol as well. It's rolling a little bit backward. Seplat has actually been kind of on bid, there's still this pending thing on its acquisition of the approval to acquire the ExxonMobil onshore assets. So I think there is a bit of read across of what's happening in Owando that's likely to happen in Seplat as well. But we've not seen sufficient volume straight there to be able to change price currently.
Okay,
so I think it's Owando all the way there in that sector right now.
Okay, I think we'll leave it there, and of course we keep our eyes out on how all the markets end the close of Wednesday's trading session. So thank you so much for your time on our show.
You're welcome.
Abiodun Adedotun, equity trader with FB and Quest. So that's it for the markets at today.
Yeah, thank you so much, Anete. Abiodun did tell us there that profit taking seems to be the name of the game today for O&O, and it's expected because they've been on a gaining trend since last week, since that announcement was made of the 100%. So we do expect, of course, investors will want to take some profits. Even if they have to leave some, they will take some at this time. But thank you so much, Anita. All right, so we do know that a lot happened in China yesterday. That major signing of MOUs, there were 5 of them shown to us, but the minister there, I think Minister of Foreign Affairs, did tell us there are others that will take place even behind the camera. And our correspondent, Juliana Olainka, is still there. But now, instead of having her, we have an individual from the private sector who has been a part of some of these conversations going on there with President Bola Tinubu and the signing of MOUs with China. Joining us, set up obviously by our correspondent Juliana, we have Joel Ogunshola. He's the founder of Prunedge. Joins us from China to tell us how the experience has been like and what we can expect. Good afternoon, Joel Ogunshola.
Good afternoon. Can you hear me?
Yes, I can hear you. I can hear you. So do share with us how it's been. Normally, when we hear the signing of MOUs, we want to see what comes out of it. So thankfully, you're not in the public sector, you're in the private sector. So we know that you, as a businessman, you spent a lot to get there. You want to get something out of it. Share with us the experience and some of the benefits of these MOUs that we hear have been signed.
So, thank you very much. From a private sector standpoint, essentially, I think one of the news is the fact that as a country, there's been some form of upgrade in the relationship between Nigeria and China, and now there's some form of strategic partnership, which is how China views Nigeria. I think that's on one side. Today, there was a Nigeria-China Business Forum session, which ensured that primarily they could matchmake Chinese businesses with Nigerian business owners, which was really important. So beyond the MOU signing, which indicates some form of interest, we're also having on-the-ground conversations, which is very strategic to ensuring that we can deliver on value. We all do know that China does have the manufacturing prowess that is needed to move our economy forward across the various sectors. From a technology standpoint, you're looking at hardware manufacturing, electronics, and a number of other key things. There are conversations around electric mobility, CNG, which are some of the key priorities of the government, as you know today. So I'd say that one, the government involving private sector on this trip is quite strategic. It also shows that beyond saying, they're also keen to enable the sector and matchmake the businesses to ensure growth ultimately.
Yeah, so I know one very interesting one that will catch the attention or raise a lot of questions is, have you guys had any conversation about currency swap? That is a major one for businesses from the private sector.
I would say not, from private sector standpoint. I guess that maybe from a government standpoint, there's been multiple bilateral meetings. Within those sessions, there are definitely conversations. And, we do know that there's been some framework, for currency swap at some point. But that, primarily is pretty much just around ensuring that, as businesses, we can meet the right partners on the other side. And the conversations around there's been also conversations with the Exim Bank, with the Chinese Development Bank, ensuring that also financing, because it's one thing to swap the currency, it's one thing for the financing for the projects to exist. So financing has also been top of line of the conversations around how do you finance these partnerships in a way that ensures win-win, for both sides of the divide.
All right, Joel, thank you so much for giving us that update. I know by the end of the meetings, I think they're ending on Friday or so, there'll be more development, but thank you and wish you the best gains from your visits right there.
Thank you very much. Thanks for your time.
Now let's head to Berlin. Well, I think I should speak a little bit of German. I hope I can pronounce the words well. There's Rhodos, Corfu, Mykonos. Well, they are Greek, not German. The Greek islands, beautiful destination in Germany for tourists. But in recent years, they've also attracted investors from around the world, investors who were not interested there before. For instance, a beach house, but even more so, the papers that come with it. They are called golden passports into the EU. Interesting. Lars tells us the story of this. Hi, Lars. Good afternoon.
Well, thanks for having me. Yes, indeed, there's been a major change over the weekend. They're getting more expensive, but I guess I should explain a little more what exactly we're talking about here. In the past, Greece offered residence permits to anyone who invested 250,000 euros or more in real estate within the country. And that's interesting because a residence permit in one member country of the European Union comes with freedom of movement in the entire bloc. That means for years, rich people from any anywhere had an easy backdoor into Europe, buy a house in Greece, and pretty much live and work anywhere in Europe. It's called a golden passport, and they're especially popular amongst Chinese and Turkish elites, with Turkey obviously being Greece's neighbor, but not in the EU. Now, these golden passports will still be doled out, but they've just become a lot more expensive. Investors have to shell out a minimum of 800,000 euros now for property on any of the attractive Greek islands, as well as Athens and Thessaloniki, or at least 400,000 euros for property elsewhere in the country.
So this attractiveness, does it come because of the freedom of movement?
Well, obviously the freedom of movement within the EU, and depending on where you might be coming from, the security that comes from living and working in the European Union. Over the past year and a half, many investors from Israel have joined the ranks of property investors in Greece. It's easy to see why. Israel is at war, and it's quite attractive to move yourself and your family out of a zone of conflict if you can afford to, especially since those residence permits are good for the whole family. And for 5 years right away, they're good. In fact, they don't even ever expire as long as the property stays with the buyer. Now, for Greece, the concept sounded quite good. In the beginning, the program would bring money, of course, to the country, around 2.5 billion euros just last year, actually. And Greece needs money. We should note that the country was bankrupt a few years ago and had to be bailed out by its European partners. But there are now problems too. Foreign investors picking up real estate has led to rising property prices and many locals being forced to pay a premium. That at a time when not enough houses and apartments are being built for Greek locals. So there's a huge potential for conflict right there.
Yeah, well, let's talk about the legality of this.
Indeed, they are legal because, as by EU law, each member country still has full and complete sovereignty over who can become a citizen or a resident. And that is inherently a good thing, because that should be at the discretion of a national, certainly not an EU government. However, there are obvious faults with this idea. Some countries are obviously using their EU membership to make a quick buck, and that in and by itself destabilizes the bloc. Now, Brussels is currently suing Malta for its policy of giving out golden passports. They've stated that essentially selling access to the EU doesn't go with the general ideals of the bloc. They're also worried that it would help facilitate corruption, tax avoidance, and money laundering. Malta is currently not giving out passports.
All right, Lars, thank you so much for that. The golden passport causing some kind of conflict there in the EU. Now let's head to Africa, beginning with Uganda, where Ugandan authorities have closed the newly opened Chinatown superstore in Lugogo, Kampala, citing security concerns. The closure occurred September 2, 2024, following warnings of a potential terrorist attack. The store, which had recently opened at the former ShopRite supermarket location, had quickly gained popularity because of its low prices on various goods, attracting large crowds. The Uganda police force, along with other security agencies, took action to close the store as a precautionary measure. The closure aligns with recent warnings from both the American and British embassies about potential terror attacks in Kampala. The Chinatown superstore had become a significant attraction for shoppers because of its competitive pricing on a wide range of products, including home appliances, electronics, fabrics, kitchenware, sports equipment, furniture, and television sets. Following the closure, reports emerged of unrest among local population. Some shoppers and local traders expressed frustration and anger over the sudden shutdown, leading to protests and instances of rioting in the vicinity of the store. The police have been deployed to manage the situation and prevent further escalation. Authorities have urged the public to remain calm and cooperate with security measures. Ethiopian Airlines has suspended flights to neighboring Eritrea starting September 3, 2024. They cite difficult operating conditions. The state-owned carrier did not specify the difficult operating conditions, but assured affected passengers they would be refunded or be rebooked on other airlines at no additional costs. Eritrea had earlier on said that it would suspend all Ethiopian Airlines flights with effect from September 30, 2024. The airline is ranked the largest in Africa by revenue and profits by International Air Transport Association, which is a global industry body. The announcement on Asmara's suspension comes at a time the Ethiopian airline is grappling with the potential loss of another route in the Horn of Africa as Somali authorities threaten to revoke its flying rights. Good news in Kenya. The Kenyan government has announced a salary increment for civil servants for the 2024-2025 financial year. This follows the implementation of the second phase of remuneration and benefits for the civil service in the national government. Under the new structure, civil servants will also get improved allowances. The Ministry of Public Service Performance and Delivery Management says that the phase 2 of the new basic salaries and scales will be implemented for civil servants in CSG 17 to CSG 4 with effect from July the 1st, 2024. In Egypt, property prices have surged this year, 2024, with no signs of slowing down, a puzzling trend amid intense economic conditions that make homes increasingly unaffordable. A report revealed that sale prices in Cairo's upscale residential areas of the 6th of October city rose by 125% year-on-year, while New Cairo saw a 180% year-on-year rise in the second quarter of this year, 2024. The report adds that rental prices also surged, with New Cairo experiencing a 122% increase in the 6th of October city, a 101% rise. Several brokers have confirmed that rent prices in mainstream districts have also peaked, with at least 50% increases. Several factors contributed to the surge in property prices. The most important among them is the devaluation of the Egyptian pound. Concerns over a possible property bubble, a term used when properties are overpriced, have widely been ruled out by the Prime Minister, who believes that prices are unlikely to decline as there are grounds for its hike. But still in Egypt, the Orascom Construction Alliance with Colas Rail and Hitachi Rail announced the signing of a contract with the National Authority for Tunnels, NAT, and this is to upgrade Line 1 of the Greater Cairo Metro. According to a statement, Line 1 of the Greater Cairo extends 44 kilometers and connects 35 stations and transports more than 1.5 million people daily. The project will increase the line's efficiency and capacity in addition to improving safety and performance levels. The project will start in October and will last for 64 months while maintaining the line's continuous operation without interruption. Colas Rail and Orascom Construction will upgrade the electrical power supplies and lines and electromechanical systems and stations. Tunnels and on the railway track also will get some attention, along with associated civil work, and this is according to statements shared. China has signed an agreement to revamp a railway that will help landlocked Zambia, which is Africa's second largest copper producer, export the metal through to Tanzania. The heads of state of the three nations oversaw the ceremony at the Forum on China-Africa Cooperation, kicking off the biggest upgrade of the Tazara Railway since Mao Zedong agreed to help build it in 1970s. The line links Zambia's mines with Tanzania's main port on Africa's east coast. It could play a crucial role in exporting copper to China, which is the biggest consumer of metal used in items ranging from air conditioners to electric vehicles. Well, taking over the concession of a strategic export route for critical minerals from Zambia and neighboring Democratic Republic of Congo is part of a response from China to the US backing another rail project that heads the opposite direction to Africa's west coast, and it's the latest in a tussle for influence, which is sparking a real rival in the region. I guess we can ask them to also look the way of Nigeria, and let's have a rail also, whether it's China or the United States, we're here. But, our president is still there, so perhaps We'll hear about that by the time he comes back or before he comes back. Now let's head to the crypto space. Now, we had an unfinished conversation with Olumide Additional yesterday. We hope to conclude that today. But first of all, let's keep our eyes on the board and see what the numbers look like. I can tell you that it's a very red midweek trade today. We see Bitcoin just dropping, and now it's $56,703.37, lost almost 4% in the last hour or so. And so we see that it's just so red right here. Ethereum has followed suit, almost 5% down, 4.36. BNB, Ton also, of course, getting a lot of attention. Cardano is down, Solana, TRX, and it's all red market. Let's find out what Olumide Additional has discovered about what's driving the market in this sea of red at this time. Hi, Olumide. Good afternoon. Good to have you again.
Yeah, good afternoon. Thanks for having me, Ini.
Great. So what's happening in the market? It's so red.
Yeah, it's a follow-up of what is happening generally in global markets. If you recall what happened yesterday, where we saw the Dow dropping by more than 3%, the market losing about $1.1 trillion in market value, Nvidia dropping 300 billion in market value. That also translated in the crypto market, where Bitcoin lost the 58,000 support, and right now is floating around the 56,700 after dipping to 55,000. So, Ini, there are three things happening really among investors' mind. It seems bad news, good news is bad news, because the market is really at the peak. Secondly, you're seeing that investors are deleveraging, and the US government is becoming aggressively on systemic entities like Nvidia. So Nvidia plays a key role in the tech and crypto space in terms of the type of chips it produces. Recall that they also have exposure around Bitcoin miners entities. So that really also affected the news. And September is a month where the dollar usually shows good sides, despite the fact the narrative that US Fed will reduce interest rate. I think that has already been priced in. So investors are really cooling off, and I think the only thing that can build the only thing that can build the bulls right now is job reports showing some confidence, because the crypto market is really showing the positive correlation about the fear investors are having about US recession, and that's also even kicking to places that usually respond against recession fundamentals. So I think Bitcoin right now is having a very difficult time, and that's why, unsurprisingly, we're seeing great amount of liquidation in that space.
Yeah, but Olumide, I thought that the fear of recession had dropped, and now we're looking forward to that rate cut. I think traders are putting about 41% or so of a 25 basis rate point. I thought that would be the focus at this time. I understand that Nvidia is a disappointing one that dragged the AI and affecting the AI of parts of crypto. But I mean, we're in September. We're expecting a rate cut.
Yeah, investors are sensitive, and if you look at the economic data that came out in the world's largest economy, talking of manufacturing data, it wasn't the two data readings were not impressive. So that really took investors off the cliff. And also, additionally, like I mentioned, we are entering the election cycle, so rebalancing and cooling off will definitely take its toll. And it's been an amazing run this year for US tech stocks and US equity market. You can't take that away. But translating it into macros, you could see that the crypto market, apart from Bitcoin, many coins have suffered. Ethereum's year-to-date gain is negative. Many altcoins, particularly Tezos, Solana, year-to-date gains are not as impressive as one should think. So it seems the bullish run is just like an more money, because right now the bulls are urging, and it's been a very inconsistent bullish run, despite the fact that Bitcoin is oscillating above 50,000 support level. So yeah, you could argue that it seems that it's just September, but you look at how the year has been in other markets apart from the United States, it has been lukewarm, and it's already showing, because big companies that are even making huge profits are not making huge profit from the economy. They are making huge profit because they are downsizing, and we've seen that in Meta, Google, Amazon, Apple. So really, I think investors are facing reality, and the fact that Warren Buffett, an investment legend, is keeping over $200 billion in cash, it tells you that all is not well with the global economy.
Olumide, is investors looking the way of Ton blockchain now?
Yeah, investors. So for me, I think Bitcoin will still stay until, because of, look at the attraction it has brought through the ETFs. But that can't be said about Ethereum, Solana, and some leading altcoins. You could see that Ethereum has had a dismal performance in terms of inflows through ETFs, despite the approval from the Securities and Exchange Commission. So I think it's a wait and see approach. But my guess is that Bitcoin might not have it that bad if the US election doesn't get that volatile. But I don't think we're going to see that bullish run we saw in the first, second quarter. That I can say categorically, even with the interest rate cuts that is coming to play.
So the dogs listing frenzy, is that over now? I know we're counting down to hamster.
Yeah, but if you look at dogs chart, if you look at dogs right now, at some point it broke the 0.0010 support level. Now it looks like it's getting back. But it's not that it's over, but there's a dark cloud in that ecosystem, the Ton blockchain. You look at the fact that the Telegram co-founder was indicted for serious offenses in one of the biggest economies in Europe, in France. So, and you know how it plays out. The judicial system kind of show independence against with the political establishment. So we don't really know how the case will go. And that has really showed moderation in the appetite, because at some point, Ton was looking like it was going to break above the $8 mark in July 24. But right now, it has broke the $5 support overnight. So my concern is that if we don't get those things sorted, I think dogs community might suffer a bit. But you know, it still has strong fundamentals. It has over 40 million users. It has interest in the crypto space. You can't disregard that. But you know, with the fact that retail participation is what accounts for most of that volume, one will say that recession fears might really dampen the upsides in future.
All right, Olumide Adesina, financial market analyst, thank you so much for your time.
Thank you for having me.
All right, that's it on the program. Thank you so much for being a part of Business Incorporated this midweek. We'll have a midweek NGX stock market report at 10 p.m. and then I'll see you again tomorrow. I'm John Mekwa. Enjoy the rest of your day. Bye-bye.